Hello, I'm Dominic Hobson, co-founder of Future of Finance. My guest today is a man who needs little introduction to anyone who follows the progress of the global securities services industry. Vivek Ramgopal is president of banking, financial services and insurance products and platforms at Tata Consultancy Services, which means he leads global growth for the firm across the whole of the financial services industry. But Vivek's responsibilities also include Quartz, the platform TCS has built to help its clients use blockchain technology. Vivek, thank you very much for taking the time to talk to the members of Future of Finance.
Thank you, Dominic. My pleasure to be here with you. Glad to talk to you.
Let's begin with that job title. You're running products, but you're also running platforms. What exactly does platforms refer to in your job title?
See, when we provide a platform, Dominic, what we do is we provide a complete service. So it's not just a product or a solution that is installed and deployed for the customer. You provide a service that's typically SaaS, and then there's operations on top of the SaaS. So it's what you could call as BPaaS. So we provide business processing, and we are responsible for the outcome, for the end outcome rather than for just the software. The other thing that I thought I should also call out when it comes to what we provide as a platform is that we provide an SLA-based, outcome-based service. So our customers are predominantly focused on the outcome; they are not focused on the software. And also, it tends to be much more of an OpEx-based model than an initial license and CapEx-based model. Whereas when you look at it as a product, when we provide products, we provide solutions. The focus is much more on the software, the solution, providing it predominantly provided on-premise even today, or on cloud, where customers have chosen the cloud provider and we deploy it on their cloud. So that's the difference in that sense on why we say platform and why we say product. And one more thing that I would add there, Dominic, is that when you create a platform, it's not just about TCS solutions. We also bring together partner solutions a lot more on our platform and create like a complete ecosystem from which people can pick the service that they want to subscribe to.
You rightly emphasized there the outcome from the customer's point of view, but you are still selling them products, and therefore products has remained in your
Yes. Yes. Absolutely. Because see, one is that we do both. There are organizations which only do one or the other, but we provide the complete service in the form of a platform. And in a lot of cases, particularly true, for example, with financial market infrastructure, examples like those, where customers still want to have everything on-prem, they want to have complete control over their infrastructure. And in those cases, our focus is so much more on the product and delivering the product to the customer's needs.
That's interesting, and we'll come back to financial market infrastructures. But before we do, we are called the Future of Finance, so could we talk a bit more about Quartz, the TCS blockchain business? That's, as I said at the outset, one of your responsibilities. Could you explain initially what services it's offering in the digital asset markets? Are you offering just a kind of what I call a tokenization engine, in other words, an issuance and distribution tool for tokens, or are you offering a full service with all the trading, the settlement, the custody, the asset servicing as well? What does Quartz do for customers?
Quartz offers the full service, Dominic. It offers this service across the spectrum of what you could call as markets and what you could call as the future of markets in that sense. For tokenized securities, all kinds of tokenized assets, if I may, right? The idea behind creating Quartz differently from what we have created in TCS banks is that Quartz leads with innovation. It is at the cutting edge in terms of technology. Secondly, we also create Quartz in the form of point solutions. So you're not talking about larger core systems. You're talking about disaggregated point solutions that you can deploy, be it for tokenization. It could be clearing and settlement, depository. You spoke about trading. We do KYC and onboarding of customers, and KYC is a very important part of the value chain. And we believe that it can be so much more of, you could say a DLT-led space, because, KYC, obviously all of us have too much data floating around. So in that sense, we provide the complete gamut of solutions and also across asset classes. So that's how we have you could say, put together a set of solutions around Quartz.
Now, people like me, of course, tend to associate TCS with the financial services industry because that's what we're interested in. But you've always had a business outside financial services, and I know that Quartz is not exempt from that. You're looking for clients for the blockchain products in health and energy and manufacturing. What sort of use cases are you finding there, and do they have relevance for the financial services industry?
Yes, yes, yes. See, actually, because of the fact that financial services tends to be the largest of the TCS verticals, and also our maturity is very high in financial services compared to a lot of others. We started, we start everything in a sense with financial markets and financial services, and some of us have that in our DNA. So, it tends to go that way. Even today, on Quartz, the majority of our customers are in financial services. So while we have created solutions around tokenized markets, like I just said, Dominic, we've then expanded into areas of banking, KYC. Then we've expanded into CBDC as CBDC becomes more important. In parallel, as we created and as we looked at the ecosystems that we need to create in order to make a blockchain-based solution or a distributed solution successful, we went ahead and looked at different spaces which went beyond financial services. And for example, there is provenance that you look at. There is managing the entire life cycle in a supply chain environment, right? We have large supply chains in a lot of companies, including pharma companies. We have done some very interesting work with Roche, for example. So when we look at those cases, there are some very, very specific nuanced examples that are there for DLT, which are very different from what you would get in the financial industry, where provenance is not anywhere near as important. Managing the supply chain, making the supply chain more efficient is not as important. So those are examples that we've picked up, along the way. One other area is, contract management, contract authoring, contracts themselves, how you manage the contract, manage it more efficiently. Just the other day I was reading that, governments are putting pressure to get money faster to small and medium enterprises because, their liquidity is at such a premium, right? And then a lot of them tend to do bill discounting and aspects like that to get cash out. So how do you make it a lot more efficient? How do you make sure that the whole process of getting money for a small industry is not 120 days, 150 days? How do you compress it? So those are areas which we are also looking at to see if DLT gives you the certain sense of security of the certificate or the invoice for you to be able to process the payment faster. Lastly, and I think this is also a future area, is how do we look at self-sovereign identity? In a sense, you could even say it is aligned to KYC in some manner. How do we look at self-sovereign identity? What we do ourselves as a way in which you could manage identity so much better, proof of identity so much better as we go into the future. So these are different, you could say, examples of business processes, use cases that we have picked up, which are very different from what we do in financial services. But to your specific question on their connection to financial services or possible applicability one day to financial services, I think it's clearly there, particularly in two areas. One is when it comes to identity. I think there is, already identity is becoming digital. There's potential to make one KYC in a country, make the identity digital and make it kind of something in which we can decide how to share the details in one uniform form for ourselves, and then every financial institution gets it. So I think identity is a very powerful case. The other one also I would say is the whole trade life cycle and bill discounting. I think there was a lot of interest in trade when we started, but then if you look at the whole cycle of contract management to trade life cycle, trade finance, and then to bill discounting, I think the potential for compressing that and to making it more efficient across the financial value chain is higher. So I would call these out as possibly the two big examples.
I'm very interested you highlight digital identity as an opportunity, because at Future of Finance we got very excited about that as a solution to that KYC problem, which you've mentioned more than once in this conversation. Your financial institutions spending hundreds of billions of dollars a year often duplicating their own work, let alone the work of other organizations. And it seemed to
Yeah.
us that digital identities were, but it also seemed to, and I know India has a particular experience here, which may be relevant, but it seems to be very difficult to get, for this idea to get traction in North America and Western Europe. Do you, I mean, clearly you see digital identity as a major contributor to efficiency here and an opportunity for you, but and you're doing some work as TCS to help it happen. But what do you think is required for the idea to break through into the other developed financial markets?
I think one thing which is not there in a lot of markets is some form of, you could say, national level digital wallet, right? I think if there is a wallet, that's where India has been ahead of many countries. I think if you have digital wallets are also okay as long as they are standardized. You cannot have 20 wallets, you can have two or three. But if you have standardized wallets in which you can keep your identity, which everybody is aware of and everyone has an API to access, then I think this will happen a lot more than what it does today. I think the power of digital wallets and digital identities has not been well understood in a lot of markets. I think it's probably, I think the benefit that India has in a lot of these cases is that when you're not having one form of technology, your ability to leapfrog is so much higher. And in a country like India, the advantages of digital technology being used to leapfrog goes without saying. But then when you have had national IDs for a long time, like the social security number and other such IDs, and when you have a particular way of handling it, I think they are not getting digitized faster. But on the subject of DLT, the national IDs in India are not on blockchain. For a lot of countries, I would say, I think when they digitize their national IDs, their social security numbers, I think it is a no-brainer that they should go DLT straight away. I mean, the technology lends itself so beautifully for that. I think it would be a travesty if we do not use it and leverage it.
Another obstacle to blockchain getting traction has been this lack of interoperability, most obviously between the different blockchain protocols, but also between the blockchain networks and the traditional financial markets. This has really emerged as a pretty large obstacle to the growth of digital asset markets. And I know that Quartz has developed a solution that facilitates that interaction, not just between the protocols, the blockchain protocols, but between those blockchain networks and traditional markets. Can you tell us a bit about that? Because it's clearly an important breakthrough in helping digital asset markets take off.
Yes, see, Dominic, for us from the outset, interoperability was a need, right? I think we always felt that even though there was a lot of talk about disintermediation and who will go out of business, who will blockchain disrupt and disintermediate, for us, when we had our conversations with our customers, it became very clear that we need to have coexistence, we need to have interoperability, not just interoperability between one form of one blockchain network and another. We cannot be in islands. We have to make them connect. We have to interoperate. We created our Quartz gateway solution precisely for that. And also for us to be able to interoperate with other networks, messaging networks, data networks, so that you are in an interconnected world and not in an island, because when you are in an island, you don't get the critical mass. And even today, I am concerned that in a lot of the first set of, you could say, coexistent TLT based projects which are out there, there's not enough connectivity. They are standalone, they are in islands, they coexist with other ones. Now, if we break this, and that is where Quartz Gateway comes in, if we connect these together and make the data move and reconcile across these networks, then you have something powerful that coexists and you can use next generation and older technology together and not have one or the other. So I think it's in some sense the only way. It is in some sense the only way in which we can, you could say, leapfrog into the future. Not abandon one for the other, right? It's it's very difficult to abandon any system and transform it. In my view, Dominic, I think there's too much resistance for that, and I think a complete migration is difficult. So coexistence with a level of interoperability is clearly what we see as the way forward.
Indeed, as you say, jumping from one technology paradigm to the next one is indeed very difficult. And you talked earlier about customers being focused on outcomes. So I know that you understand the point I'm about to make, which is that when we talk to the buy side, to asset managers and to institutional investors, who are, after all, the most important institutions in helping digital assets actually take off, the one thing they don't want to get involved with is the operational complexity of investing in traditional assets, but also investing in digital assets. And at the moment, from their point of view, digital assets exist in one silo and traditional assets exist in another silo. They're kind of looking to their custodian banks and fund administrators, and to a lesser extent, by extension, to central securities depositories, type of institutions that are your clients, to insulate them from that complexity. And if they're looking for their clients to, or their suppliers to insulate them from that complexity, those suppliers are your customers. How's it affecting the way TCS goes about developing its technology? You need to help those suppliers insulate their own clients from the complexity of dealing in digital and traditional assets at the same time?
Yes, there are two parts to that, Dominic. One is clearly they do not want to deal with the complexity. Second is they do not want multiplicity of systems, which is where the challenge starts coming in. They want to see them together as much as possible. So for us, while we create coexistence between solutions, we also need to ensure that the level of integration is seamless, such that their end clients are not having to deal with two different systems. So if somebody is trading, they shouldn't have to worry about that trade going to multiple systems. They shouldn't have to worry about that asset being held in multiple systems. The view that they get should always be seamless. And as long as they get that view, they're going to invest in all kinds of asset classes. So if we start from that with the end in mind, then it becomes much more elegant for us to stitch together a solution in which, okay, this is what the end customer needs. So even if it is going to hit 2 or 4 different systems with the custodian, with the broker, then how is it that it is done in a way in which the end user does not feel these hops? Now, if we do that, then I think we do not have a big challenge in terms of managing the coexistence. And that is what we are trying to create. Make people trade in multiple asset classes, hold multiple asset classes, and take away and kind of like, it is our responsibility to simplify that complexity at the back end and make it possible for them to just look at these as different line items in a portfolio.
Can we zoom in on one of those TCS client groups in particular? And I'm referring here to central securities depositories, because TCS has had for a very long time now a very large market share of the software used by central securities depositories. As you talk to them, and I, of course, have had conversations with them myself, but how excited do you think CSDs are about the opportunities for them if digital asset markets take off? Are they enthusiastic, or are they waiting and seeing, or are they actually negative about the possibilities?
They are, enthusiastically waiting and watching. It is like, see, it has taken a lifetime to have this portfolio of customers that we have, right? It's these are, you could say, and the reason why I'm putting it that way is because a lot of these programs, they are once in a generation. And the CSD industry, the business, is used to doing programs which are once in a generation. They do not change systems every 5 years or 10 years or 15 years. I think core systems tend to have a much longer life than what they initially start off with in the business case. Typically, when we put a business case for a core system, we're talking 5 years, 7 years. That's not how long finally those systems run. They run for much more than a decade. So given that, I think there is excitement about digital assets. There is also a certain amount of, you could say, lack of clarity about them having multiple systems which will run in parallel. So a lot of them have different systems for different asset classes. So if you tell them that the digital asset is another asset class, that tokenized securities are completely different asset class, then the paradigm is that, okay, I will have another system for it. And then these will run together. I will run another depository system for tokenized securities. But that is not necessarily the future, right? Our own software, we always have multi-asset class solutions. So you don't run different systems for different asset classes. So when you put these together, I think there are 3-4 points that a lot of these people have to consider, and I think they are considering it. One is that are they going to have a new transformation program? Are they going to replace their core system, or are they going to do digital assets in a new system, have it running in parallel to the core system? I think a lot of them are thinking that they will have to, coexistence in the solutions. Now, when they do that, there is also the big question. A number of CSDs are running older systems, which could be towards the end of their lifespan. Now, what do they do? Do they now go forward and completely transform that, and also look at digital assets? Is it one system? Is it two systems? That again is a problem that they need to solve, Dominic, in my view. I think we have solutions that cut across all of these. You could say conventional asset classes, digital assets. How do you service both of them? I think a lot of them need to solve the problem in their boardrooms, in their strategy meetings. Do they want to run 1, 2, 3 systems? Do they want to have digital assets running in a parallel track? While they look at modernization of their existing, you could say, end of life systems and give that higher priority. This is what, in my view, is confusing them a little bit. Which do they give priority to? Because one is fundamental to their business, and the other, in the form of digital assets, drives growth. So, do they bring these together, or do they not bring it? And as they look around the world for different examples, they decide one way or the other.
As you've just been explaining, there is, of course, a role for CSDs in helping digital asset markets actually to happen. But on the other hand, they have quite a good excuse for waiting and seeing, which is that there isn't that much happening. And some of them will know this from their direct experience with this seemingly endless series of proofs of concept and pilot tests and various collaborative ventures. I mean, I was looking at our own data sets here at Future of Finance and looking at the inordinate number of these pilot tests and proofs of concept which have gone on over the last 7 years or so. My question is, we seem to have proved in multiple different ways that this technology works across equities, across bonds, across funds, even in derivatives and collateral management, goodness knows what else. But why have so few of these initiatives actually got into production? What do you think explains that?
See, I think they have all proven what they wanted to understand, right? In terms of how much scale they can do, what can you do, how do you have an end-to-end life cycle, how can it run in parallel to existing systems? It is proven. For the CSDs, unlike many others who are working with blockchain, I think the ecosystem problem is also not there. I think a lot of others have an ecosystem problem because the DLT works best in an ecosystem. How do you create that ecosystem? When it comes to CSDs, they are natural providers of ecosystems. They run them. So that problem is also not there. So that is also out of the way. In that sense, they know what the technology can do. They have an ecosystem. They are ready. So these challenges are all out of the way. I think the big problem that they have to tackle is how they go from innovation to transformation. That is how I would describe that. I think it is innovation versus transformation. Innovation, proof of concepts, pilots, these smaller projects, I think they have all been able to find ways to do them, get the results, the proof points, be able to tell what you can and cannot do with the technology. Transformation is a completely different ball game in which one, you need to, you could say, replace parts of your existing system at least and transform it to go to the next generation. Secondly, you need to create greenfield markets in which you can apply the technology and use the technology to drive growth. So I think it is in the transformation space and in the transformation paradigm that there is a certain level of reluctance, Dominic, to be able to, you could say, move forward. I would not say take the plunge, because in this case they are not taking something that is difficult. It's that, see, this is also one of the reasons why a lot of, you could say, systems run way beyond their lifespan. I would not use the word legacy loosely, because who's to define what is legacy, but there is a challenge of managing knowledge in older systems. So those problems are also there only because these transformation programs face reluctance and resistance from the markets. So I would not say that this is a financial market infrastructure or a CSD or an exchange problem. I think these are market problems, because at the end of the day, the resistance comes from the entire market. It does not come from the singular centralized institution. Regulators want to do the transformation. They want modernization. They want digital assets. They want tokenized assets. That's very clear now. Most regulators are pushing for them. So what is holding the nations back or markets back is the larger, you could say, integrated market resistance or lack of market momentum drive to execute these projects. So when we face an innovation versus transformation question, there's so much more appetite for innovation for smaller projects, and there is not at all the same level of appetite for heavy lifting transformation programs, greenfield projects which need to be taken on board. So I think if that part can be solved, which is probably what they are also looking at providers like us to solve. You spoke about complexity versus simplicity earlier. I think if they feel that it is less complex, more predictable, programs will run a lot more to schedule and budgets, then I think more and more of these transformation projects will be taken up.
I hear what you're saying about how difficult it is for a segment of the market to have or make a transition to digital assets. What worries me about that observation is, of course, that if everybody has to digitize, perhaps nobody will. And you brought up the question of exchanges there. And I just wonder if when you talk to exchanges, and maybe when you talk also to central counterparty clearinghouses, these other vital parts of the securities market infrastructure, whether you get a different perspective from them to the one that you hear from central securities depositories or custodian banks or asset managers or even regulators, are because exchanges and CCPs have this same issue. Do we need to transition off our existing platforms? If so, when should we do it? What's the right time? How much will it cost? How long will it last? Do they have a different perspective to, say, CSDs?
Yeah, I will put exchanges in two buckets. One are the very well established exchanges, and then there are the smaller ones. You could say they are the challengers. The difference when it comes to exchanges is that they compete a lot more than the CSDs. They have a natural need to compete for market share. So I think they are always looking to see how to compete a lot more than CSDs naturally, because CSDs predominantly are national infrastructures who have a quasi monopoly. But I would not say that they are excited about tokenized securities as much as I would have expected, right? I would have thought that exchanges would move faster. Um, I think they are not very clear about whether this will drive new growth. Clearly, it will. They are also not sure if tokenization will replace electronic securities, right? So I think that is where we are having a little bit of we are in a, you could say, transitory period right now in terms of solving that problem. And in order for people to succeed with something like this, it is necessary for us to look at 3-4 year programs and not 8-10 year programs, Dominic. That's the other thing, right? I think today we need to create business cases that go to fruition in about 3 to 4 years. Should be able to show the numbers in 3 years, 4 years. So you cannot run 7-8 year projects, 10 year projects. I think a lot of the earlier generation projects ran for much more than 5 years. So that also needs to change. So that's also something that probably disturbs these people. But I would not say that exchanges are more excited, but they feel the need to compete and to create new products more than other, you could say, players in the infrastructure space.
Let's move away from digital assets now and talk a bit more about your established businesses. And it's, from everything we've said to each other so far, we're kind of ignoring quite a large part of what you do, that I in BFSI, banking, financial services, and insurance.
Yeah.
And I know that TCS has a very successful outsourcing business in the life and pensions area called Diligenta. I've experienced its services myself as a product consumer. Does it ever cross your, tell us a bit about that, but does it always ever cross the mind of you and your colleagues to develop a similar outsourcing business in the capital markets with all those firms you're currently just selling software to?
Yes, big yes. As an end customer, I think that when it comes to the UK, we have expanded Diligenta to a level where we have scale. If you look at what we do across Diligenta and Nest, I think we service pretty much 40 plus % of the UK citizens. Right. So we've really, established and created that scale that taken time to do. But we have a lot of learning as to what works and how to make it work, how to make it work in another segment of the financial services industry. So I think we have the good lessons from Diligenta to be able to do more, including being able to operate, like I said, that's the difference when it comes to a platform. Diligenta is a platform where we provide a complete service and we are responsible for the outcome. In a sense, we are regulated. So it's a very different type of business to run. And we will definitely look to do that in capital markets. We need the right opportunity. I think we would like to start with a different level of scale than what we've done in Diligenta, because that's taken more than 10 years to build. I would not think that the financial market infrastructures are the starting point. I would think that other segments of the capital markets value chain are so much more, you could say, ready to lend themselves to a utility type model. So we definitely want to create those utilities, state-of-the-art modern utilities, which are based on a SaaS paradigm. We do have utilities from earlier, and utilities are not new in this business. But I think we will create a SaaS plus paradigm in which we will create more efficient, you could say, utilities than what there are today. Our insurance business is the largest of the BFSI that we do, Dominic, by the way. I is towards the end of the BFSI definition. But for us, the insurance business is by far the largest business that we do. And Diligenta is a significant contributor to that.
I can see why you want to expand that outsourcing business. I think I'd be right to say it's some more solid business with higher quality earnings than selling software. It's obviously more difficult because it's regulated and so on. But I can see why you want to grow that. But it does mean that you're in this position where you're selling software on the one hand and you're providing outsourced services on the other. How difficult is it to keep those two very different businesses in proper balance?
There are, I would say, 3 different businesses, Dominic, not even 2, right? Because, as TCS, our IT outsourcing is our largest business, right? When it comes to Diligenta, what is outsourced is not IT. What is outsourced is the complete business, right? So there are 3 parts to it. One is the software business, where we create software product solutions and license them. The other is the platform business, in which we take responsibility for a complete outsourced service. Then the third, of course, is IT outsourcing. So these are different businesses. What we do in TCS is that we house them and we kind of grow them, nurture them, structure them very differently. So these are completely different business units, business lines in TCS. They're treated differently. They're measured differently in terms of our results and our KPIs, which means that we are like small companies within a company, right? So that gives us the flexibility within the organization to be able to service customers who come to us for different things. Sometimes the same customer is doing different things with us. is doing work with us in completely different silos. So they will take, you could say, outsourced. They will give us outsourced projects. They will take some of our people to do programming, testing, work on cloud deployment. But on the other hand, another part of their business will be outsourcing completely to Diligenta, or they will be, buying a licensed product from us. So that is how we manage it. A lot of what the work that I do and my team does, we call these as strategic business units, where the model is different from, you could say, large IT outsourcing, and is predicated on product licenses, product businesses, and platform outsourcing and platform-based subscription services.
There is
They are
one.
they are complete silos. And just as the last point on that, Dominic, sorry to interrupt. We also need to structure them as silos and take care of them very differently, because we do not want to have we have very clear structured silos and walls between where we create our solutions and products and where somebody is servicing in a third party solution.
I was going to say there must be a challenge in maintaining the right balance between the big picture, wanting to transform things, and the micro picture, dealing with customer pain points on a day-to-day basis. And I know that TCS has developed this business helping custodian banks manage corporate actions. Now, this is one of the oldest problems in security services. I've been involved in this industry for more than 30 years, and I think corporate actions were a problem which needed solving back then. They certainly need solving still now, and all sorts of efforts have been made over the years to do that. But you are directly engaged in that. So tell us a bit about how you're approaching it. And secondly, tell us what you think the components of a final effective solution to the corporate actions pain point would actually look like. So what are you doing now, and what's the eventual solution look like?
See, the problem that we feel that has happened in corporate actions is that I would not call it 80-20, etc. It's a little bit cliched. But the difficult elements of corporate actions are usually less than 5%, or even lesser in some markets. In some markets, it's less than 1%. So the complexity in solving that, takes away a lot of the benefits of the remaining 90 or 95%. I think we need to go more and more towards the level of extreme automation in order to be able to do this. What I mean by extreme automation is that we need systems where when there is a problem, we are in a position to identify, isolate, and correct the problem through software. Right? That level of intelligence is needed. Today, we do not have that. What happens whenever there is a problem is that the level of manual intervention is very high. Because it is very high, the correction of the problem or the rollback and the reprocessing does not happen within a reasonable period of time, and hence this whole inefficiency and you could say managing liabilities, all those aspects come. So I think software should get more intelligent. I think the next wave for us will be to make the software more intelligent so that you're in a position to do these corrections. I would not say real time, but in much more compressed time, so that the contagion of the error is a lot less than what it is today, which is why liabilities and such aspects come. The other thing that we are doing also is in terms of, you could say, information distribution, corporate announcements. How do we use technology, including DLT, to be able to disseminate information accurately and disseminate it once? Because today, the whole process of scrubbing and having, multiplicity of information and working with information which is not yet 100%. So these are, you could say these are one of the biggest sources of the problem. So if we eliminate that and eliminate that problem at its source, which is the data, and only publish it once, ideally on a DLT, then again, we are getting into a situation where one big part of the problem is solved. So if you have DLT at the source, and if you use a level of, you could say extreme automation and AI at the other end of the processing, including when there is a problem, then I think we are getting towards what I would call as the next generation of corporate action systems.
I'm interested you brought up both blockchain and AI in the context of corporate actions, and you see a role for both those technologies in helping solve that long-standing problem. My final question for you is actually on exactly that. I sometimes think that we spend so much time getting excited about blockchain possibilities, we tend to ignore this other flavor of the month, which is artificial intelligence and machine learnings. Have you identified clear use cases? You've just mentioned one, I guess, in the case of corporate actions, but have you identified other use cases for AI and machine learning in the banking and capital markets sector?
AI is definitely the flavor of the year, Dominic, if not the month, right? I think a lot of the innovation, you could say, focus and innovation budgets are going to be for AI in 2024, maybe even 2025, right? And I think in AI, we are clearly, separating what we look at as AI in our solutions between predictive AI and generative AI, right? When it comes to predictive AI, we already have it in a lot of our solutions. We use predictive AI for areas like fraud detection. We use predictive AI in capital market surveillance. So predictive AI, just in the financial industry, is already there, and AI/ML algorithms are being used by us. Not for many years, I would say the last 2 to 3 years. Why the last 2 to 3 years? Because the maturity of predictive AI and its AI/ML usage and the ability to deploy it at scale has improved in these last 5 years, much more than what it was, right? Otherwise, AI has been there for 30, 40 years. It's not new, right? Most of us have studied that in college. It's been that old. So that's one side. So then the second is, how do we use generative AI? I think initially we are, coming out, and you will see that soon. You will see it so much more in areas related to, you could say, training. Assist is the mode where, you could say, working along with the user and assisting them to be more efficient and less error prone and faster. That will be an area. Then the other area that we are looking at is generation of reports, where I think today it is so much more of a laborious process to define, and those reports tend to be finally the output that you get from the system. And if you get more custom reports which are intelligent and generated on the fly through Gen AI, I think that will be hugely beneficial. So these are some areas that we are dabbling with. You will see us come out with that very soon.
Mm-hmm.
DLT plus AI, absolutely. I think there is a very important combination there. Why? Because there is so much of data that over a period of time will be there on DLT. That data will be there once, and that will be the truth. So when you have one source for truth, and it is there on DLT, then the ability for us to run, AI on top of that, AI engines, which will actually, cull out and create information from that data, I think it's going to be incredibly powerful. So that is where I think DLT plus AI will come in. The first that I, spent time on the concept of DLT plus AI was in 2019, Dominic, right? And of course, that was pre-Chat GPT, pre-craze for Gen AI. But I think, we have done some spade work on it. We are not going to rush into solutions for the sake of doing that. We have to handle the fit for purpose of AI very carefully, because AI also has its own, you could say, cost of ownership. So I think it needs to deliver on return on investment. So we will be fit for purpose in our use. And also, I think we have some clear ideas on where the combination of technologies, predictive AI, generative AI, and DLT, can come together in intersections to be able to deliver the most compelling value.
The fact you've been thinking about
24 and 25 this year, not too much into the future. Sorry to interrupt.
Okay, well, I was going to say the fact that you've been thinking about how to combine blockchain and artificial intelligence for 5 years, and it's about time that well, you're now in a position where you would want to see some return on investment, is a great place to stop, because it's an optimistic note. So Vivek, thank you very much for taking the time to talk to the members of Future of Finance and share your wisdom and your knowledge and your experience with them. Thank you very much.
My pleasure, Dominic. Thank you for this opportunity.